And John, I'll start with you. I know this is something that you're quite proud of, having been and started the Ariel Fund. You look at what's happened in the last 24 hours. You've been through so much in your fund. Do you worry about managing through a Trump presidency?
No, I really don't. I think our economy is resilient. The economy is coming back. We know our unemployment numbers are now under 5%. Here in Chicago and around the country, you're seeing cranes going up, buildings are being built, people are shopping more, malls are full, stores are full. So the momentum is so much that we're not worried that a Trump presidency will have any downward impact on our economic recovery.
Mario, how about you?
Well, I think the agenda is pretty much, most of it is pretty obvious of what was going to happen. Infrastructure spending, roads, bridges, inland waterway, and so on. Establish the presence of the military in the United States. The notion of no adult left behind because of technology changes. Handle an energy environment. Work on the notion of student loans. Handle the tax dynamics. Handle regulatory reform. So a lot of this has been in the mix. And so there are no surprises. And the only surprise was the outcome at 2:30 in the morning, New York time.
A surprise for half the country, right, Mario? Surprise for half the country. Okay, but Donald Trump is promising some very...
I don't know about the surprise for half the country, but certainly those that didn't vote for him.
Exactly. Okay, but Mario, Donald Trump is promising some pretty big changes for the business community, lowering taxes, drastically lowering taxes, right? Rolling back regulation for banking, for energy, and not fighting or not promoting measures to address climate change as much as the prior president. Does that change at all your investments in your funds?
From my point of view, it reinforces the notion of why I want to own a piece of America. Meritocracy, the rule of law, and the free market system with all of its flaws is being reinforced. And so it allows capitalism to flourish again, and hardworking people with small entrepreneurs are now going to be praised if they are successful and not pitted against.
John, how about you?
One thing I would add is that we didn't make any trades today. We didn't make any changes in our portfolio. We're staying the course with the companies that we believe in, and again, think the momentum in this economy is so strong. We feel great about our top positions and the way we're positioned.
John, though, do you think this changes the course at all for the Fed?
My own reaction is the Fed's going to raise rates in the next 30 days, and they were going to do it no matter who won the presidency.
How about you, John?
Yeah, I would agree. I think that over time, as the economy continues to strengthen, it'll be natural for rates to slowly but surely rise over the next couple of years. It's the normal course of things. But as long as it stays within this reasonable range that we have now, stock prices are still reasonably valued. You know, PE multiples are not that high with interest rates around this range. So I continue to believe there's a lot of value in the market, a lot of upside here in the market, even after this great recovery we've had since 2009.
Now, gentlemen, I do want to address the whole active versus passive investing, which I know was a subject of the event that you had earlier. But Mario, I can't help myself. I've got to ask you, though, about AT&T and Time Warner and whether you think President-elect Trump is going to disrupt that merger. You're a shareholder in both those companies.
Yeah, we are, and to the degree that, you know, Time Warner closed around 85.67 today. It's got about 800 million shares. It's a fairly large cap stock. Over the next 5 years, I think they'll do close to $45 billion of EBITDA with minor capex like $3 or $4 billion. So why does AT&T want it? From my point of view, the head of the government, the president, points the head of the FCC. Wheeler is going to be gone. What is the new person going to want to set as his agenda? I think that improves the chances of this deal going through. I think Stevenson at Telephone has done a very good job of laying out the fundamental case of why he wants it. So I think the odds have improved substantially, even though Trump has a problem with the deal going through.
John, it's Yvonne in Hong Kong. I want to get your take. I mean, markets seem to be very focused on what Trump could do domestically in the States, but what about internationally? Because what if the rhetoric becomes reality when it comes to trade policies here in Asia? He didn't say particularly nice things about China and Japan, named them a currency manipulator. He wants U.S. allies to pay their share. Does this force the market, particularly here in Asia, to take a pause, or does Asia trade at a discount now?
Yeah, I think things will be different now that the election is over. You know, we have a Republican Congress. We know that Paul Ryan and the leadership in the Senate believe in, having free trade. And I think that they will be an important kind of a balancing act with President Trump to make sure that we don't do anything to destroy, the positive trade that we've had with our foreign partners throughout the United States and particularly throughout the world and particularly in Asia. So I'm confident that the leadership in Congress will help keep us on track there. And I'm sure there will be some appointments to key positions that will also do the right thing, because economists have been so strong and so clear on how having a good system for opening our borders and allowing free trade to happen is ultimately good for our economy and great for the nation for the long run.
Mario, where do you see opportunities post-election then? I mean, in Japan, should I be loading up on defense stocks? I do want to mention now the Japanese market has reversed all the losses that we saw yesterday.
Well, I'm not a big fan of recommending the defense stocks in China, but in terms of Japan, I think the notion of the consumer sector is quite positive. I think the notion of the yen now at 106 has got a little stronger than it should have. On the notion of, I'm a big fan of China in certain ways. I think the consumer sector is about 40% of their economy. I think the government is trying very hard to get that to grow at a 10% rate. I think they will succeed. That gives you a 4% real. The balance of the country of 60% can grow 3 or 4%. So you're going to have a real GDP growth of 6.5%, 7%. That's terrific. And I think they can pull it off. And the symbol I use, Betty, is a two-child policy. Not that you had 2 children or had less or more, but the point is they want to nurture and embellish with their safety net, the consumer sector.
Indeed. All right, John and Mario, let me bring it back, though, to here, and one of the topics that I know you're both very passionate about, which is stock picking, right? Active investing versus passive, the index investing, which has really seen a surge over the last few years. Are you the last of your generation? Is active stock picking dead? John?
No, we don't think active investing is dead. In fact, we think exactly the opposite. We think because there's been so much press around the fact that active managers have underperformed, so many assets have flowed toward index funds. And again, once everyone agrees that one thing is the perfect thing to do, usually the opposite happens. And so we think that there's been too much attention paid to indexing in this current environment. It's become the common wisdom of the moment, and I think over time it'll be proven wrong. Active management will have its day again. We've had these trends over the last 30 years that Mario and I have had a chance to experience managing our funds. These things come and they go. Eventually active managements will come back, especially in this environment where so many of these index funds and ETFs have bid up the prices of certain companies and certain industries way beyond their true value. And that allows active managers like us to go in and find bargains that will be able to outperform when the market's finally correct.
Right. So you're saying, John, there's another Mario. There's a Mario Jr. somewhere there, right? Who's coming up along the ranks. Mario, what do you say about this?
I have nothing to add, as Charlie Munger would say when Warren Buffett gives a good comment. John has covered most of my sentiments and my thoughts. The only difference is that most active investors know their companies, know how to vote the shares at a time, and don't count on the proxy voting terms of ISS and Glass Lewis to spoon feed them on what to do, whereas the Vanguards and the BlackRocks, while they're trying to build up their capabilities, are still way behind. They also have never gone into Delaware to fight for appraisal rights for their shareholders. So there's a lot of differences that are too subtle for most observers to understand, but I know the viewers of Bloomberg understand that, and they know that this also will change.
They do, but I'm curious, Mario, if and I know you go deep, you visit the companies yourself, you deeply research and you pick these companies and these stocks, but has it gotten harder, do you believe, because there's been so much index investing because of firms like Vanguard and BlackRock that the markets are distorted in some ways? Does it get harder and harder as the years go on?
Betty, that's a great question. So let me flash back. In 1970, we had an economic contraction. The market went down. The banks came out and said, we're going to buy any growth stock that can grow, and we want to project out for 20 years. We'll buy whole. It created the Nifty 50, and that then collapsed and had economic repercussions. In the late 80s, it was Mike Milken, 10 cents on a dollar. In the 90s, it was TMT. In the 08 period, there was something else. And this time, it's ETFs. I don't think it's any harder. I think it's always been hard. But that's what we get paid for. That's what we're supposed to do. And that's why we are as focused and as patient as John is about what he does. And the symbol of Ariel is the turtle, which shows that you will win the race for a long period of time.
And John and Mario, I want to end off with one more political question to each of you. I'm going to put you a little bit on the spot. John.
Yes, you're right. Mike Bloomberg should have run.
I know that opinion hasn't changed, Mario. Okay, so Mario, I'll toss that first to you before to John. Who would you like to be put in the position of Treasury Secretary?
Which secretary? The Treasury Secretary.
Treasury
Secretary. Oh. You know, I think Warren Buffett would be the best Treasury Secretary in the history of the world, and he's still got the energy to do the job.
How about you, Mario? That'll never happen, John, at this point, but I get where you're going. But Mario, how about you?
Yeah.
Donald has picked a very good vice presidential candidate. He's very good at picking people. I'll let him make that choice. I don't have anybody that I have a favorite one way or the other.
All right.